Hey, what's going on, everybody? In today's video, we're going to be covering a big week for retail earnings. We're going to look at lots of economic data that's coming this week, but no huge blockbusters like we had last week, or last couple of weeks, really. We had another choppy down week, so we'll be looking to see if we're due for a bounce or expecting more downside. We'll be looking at last week's setups and see if we made any money or not. And we'll look at some new setups we've got this week, including Roblox, Tesla, and more. Some interesting setups, which is a little bit surprising considering the way the market was looking. But you'll see, it kind of all makes sense. By the way, make sure you smash that like button. We put a lot of work into these videos and it really helps. And if you're wondering who I am, my name is Kevin D. I've been trading for 25 years. I'm a full-time trader and working through the second level of the Certified Market Technician program. If you're wondering why I do this, I work at the investor community. I run it and I run it, and we do these videos every single weekend to keep our members up to date on what's going on. We have a really cool community of like-minded traders, and members get to see these videos early and also get to take part in live streams and live mentor sessions that we do regularly. So go check it out in the link below down in the description. All right, here's a quick disclaimer. Everything we do here for educational purposes only. We are not investment advisors, do not provide investment advice. All trading investment decisions are your own and done at your own risk. All right, let's take a look and see what we've got coming up here. So for earnings this week, we start on Monday before the open with Fubo TV. I know there's some interest in this company. And we also actually should have had, I forgot to look at these and highlight this, Berkshire Hathaway. Those should be out now. They always come out on Sunday for some reason. I guess Warren just likes to do things a little differently. Yeah, that'll be important. Probably, one of the most important ones this week is Berkshire Hathaway. But like I said, that's probably already out now on Sunday afternoon. After the close on Monday, we have Occidental Petroleum. Coincidentally, Berkshire has a huge stake in that, as I'm sure you know. We've got Zoom is reporting after the close on Monday, and a lot of us in the Discord are involved in this stock, HIMS. They are also reporting after the close on Monday. And we'll take a look at HIMS a little later on when we're looking at our setups, because that's one that I think most of us are still in because it's working very well. Okay, Tuesday before the open, Norwegian Cruise Lines. We've got Target. Remember we had earnings from Walmart last week. And this week starts off a lot of the retailers with Target. We've also got AutoZone, which I know is closely watched by a lot of people. Some other interesting names down in here, some sort of second-tier names. Tuesday after the close, we have Rivian. That will definitely be closely watched, as will AMC. There's Marathon here. There's Novavax, the vaccine maker. We've got First Solar. Is one of the biggest solar panel manufacturers in the world. Blank is one that's going to be popular with people. Monster will be closely watched, especially seeing as we have Celsius coming up the day after. So lots of names here that are really interesting. Before the open on Wednesday, we'll be looking at NEO. That obviously will be closely watched. We'll be looking at Lowe's. Now you remember Home Depot reported last week, so probably won't be any really big surprises here in Lowe's. Dollar Tree is one that will be closely watched. Kohl's could be closely watched. Salesforce on Wednesday after the close. And then we've also got Snowflake, Plug, all these here on Wednesday, like Okta, Splunk, Celsius for sure. We'll be watching Celsius in the Discord. I know a lot of us have positions in Celsius. But, Viva, there's a lot of names here that people, are interested in for sure. Thursday before the open, we've got Best Buy, Kroger, Macy's is in there, some other interesting names. Costco after the close on Thursday. C3AI because we all know that AI has been really hot lately. They're reporting on Thursday after the close. We've got some more, to go along with the electric vehicles and everything. We've got ChargePoint as well. Some more of the chip space and everything in here, with Marvell coming. Not much going on Friday though. So you can see, big week. Lots, there's something for everybody here this week. I'm sure that you have positions in your portfolio reporting this week. Okay, so that's our earnings. Let's look at our economic events that are coming up. So on Monday, we have durable goods orders. That's a fairly important report. It gives us a really good sense of how the economy is doing. And now if we see this, now obviously we want the economy to be doing well. But if this number comes in too hot, it will be seen as inflationary. So we need a Goldilocks print on that number, especially with everything that we've seen over the last couple of weeks, with all these consumer inflation type numbers having come in really hot, and then on last Friday, the personal consumption expenditures coming in really hot. We need to see a bit of a Goldilocks print, not too hot, not too cold. Pending home sales as well on Monday will tell us, how the housing market is doing. Tuesday, we have CB consumer confidence. This is important. And I think that we'll find that the consumer is fairly confident, which is, again, good, but we don't want them to be too confident. Wednesday, we have the ISM manufacturing PMI. That's the Purchasing Managers Index. These are sort of considered to be early looks at inflation. Again, important numbers, but not as important as, CPI and PCE and that sort of thing. Thursday, unemployment claims, as always on Thursdays. And then on Friday, we have the ISM Services PMI. And that will, that's important because the services is an area where we've seen inflation being kind of sticky. Or one of the areas where it's being kind of sticky. So that will be closely watched on Friday. All right, so we're going to start digging into our charts here. We're going to look at the major indices. We'll start there. We'll look at international markets, important commodities. We'll look at all of the major sectors, and we'll look at some individual stocks, the FAANG stocks that are really important. We'll look at last week's plays, and we'll look at a bunch of new setups. So let's dig right into this. Let's pull up a chart of the S&P 500. This is a SPY ETF. And you can see where we were on Friday, really critical level. I think you can see why that is such a critically important area in here. Let's just zoom in a bit, though. You can see we had a nasty week, after gapping down. Oops, I should have drawn that gap in there. After gapping down on Monday, this chart has just become so gappy lately. It's just the whole thing is going to end up pink soon. Because there was another gap there, right? It's this gap after gap, and then, of course, there's this gap. Okay, so after gapping down on Tuesday, after the holiday, we continued down, had a nasty red day, but intraday it was a little choppy. The next day it was very choppy. The day after that was kind of choppy, and it looked like Thursday we got a good chance of a reversal here, right? We printed a nice hammer candle, and it's like, okay, great. Maybe we're going to go. Well, what did we do? We gapped down a lot, and that was on that PCE data that came in really hot, so no surprise that we gapped down there. But unfortunately, we gapped down below this 50% retracement that had held for a couple of days. Got almost all the way, or a little more than halfway down to the 618 retracement. But we did stop at this long-term downtrend line that we had broken through a month ago. We stopped there and bounced. And you can also see right there is the 200-day moving average, and our intermediate term uptrend line is also right in this area. So a lot of support in here, and you've got the 618 below. You've got this old gap fill. I'm not even sure that actually should even be there anymore. That cleans that up a little bit. So yeah, really needed to bounce here, had to bounce, should have bounced, it did. Now, on Monday, this really needs to get up and away from here a little bit. I'm fine with, if we spent the whole week just going sideways in here, I'd be totally cool with that. We can digest this down move. People will stop freaking out, and then we can, move up from there. But, I'm seeing a lot of bearish sentiment out there. It's really easy to get bearish when we've moved down like this, when we've come, a ways off the highs, and we've had some, at least one really ugly big red candle in there. Easy to be bearish. Just like it's really easy to be bullish when we're in these nice big moves up, and you think it's going to continue up to the upside forever. I think, getting too bullish or too bearish is a mistake. I think we need to look at this in context, and we did have a really nice move. We had a nice move in a bear market, and we've pulled back a little bit, as we should. This is what markets do. Now, I think that the most likely outcome, I don't think we're going to go racing back up to the highs here. I think that what's going to happen over the next couple of weeks, because it's really a couple of weeks until anything big happens, right? We're still 3.5 weeks out from the FOMC, so lots of time in there. And I just think we're going sideways for a while and just, chopping around in a range here, say between, this 395 area up into the 400, 405 area. Chopping around in there, I think should be expected and would be perfectly normal. I really don't think we're moving any more to the downside here. But if we did, if I'm wrong on that, and if we start losing these supports level, if we start losing this trend line, the uptrend line, the 618, then yes, we could very well see come down and test these lows. And I guess should get a line in there. Somewhere in around this area, the 378 level, would definitely come into play if we lose all the support in this area. But that's not what I think is going to happen. I think the most likely outcome is we move up from here, but we don't move up a lot. So that's our Qs, or sorry, our SPY. We'll move on to the Qs. And you can see the same sort of thing here. We had, had a down week, continued to the downside, bounced right exactly off of the 200-day moving average, and did so before hitting that 50% retracement. So you can see we're seeing relative strength out of the NASDAQ, which is actually really nice to see because, our tech stocks and the NASDAQ had been on the way down, had been showing relative weakness. So I'm totally cool with this outperforming the SPY. And if this bounces right here without completely filling that gap, that's totally fine too. This gap does not have to fill. We can move away from here. But like I said, I think that we probably find a sideways zone in this area somewhere over the next couple of weeks. Let's take a look at IWM, the Russell 2000 small caps. Very similar looking chart again, very similar to the NASDAQ. In that it is outperforming the S&P 500. We haven't even come down to the 50-day moving average on this one, and look how far below the 200-day and the 100-day moving averages are on this. Again, showing that outperformance, right? Nice green shoot here, for a little move back up. But like the other indices, probably find some resistance on the way back up. Probably finds a place to sort of chop around and go sideways for a little bit. Taking a look at the VIX. So you can see the volatility index. We had been inside this big base here for a while. We tried to break out to the downside of that, faked out to the downside. Now we've moved out, broke out to the upside, but that didn't last long. Tried it again on Friday and pulled back in. So let's make sure that this is a, this is a fake out breakout, and really want to see this come back down and just stay inside this range. And ideally move to the lower part of this range. Now, we get into the charts that I'm not too thrilled about. TNX, the 10-year yield. This one isn't too bad. We had been making this good move up here in this, and we don't want to see yields be going up, though, because it's not good for our equities. But this was fairly strong to the upside. It's still grinding a little bit higher, but kind of also sideways in here, perhaps building a base here. If this were a stock that I was liking, I'd be liking the look at that base. Because after a move up, you want it to go sideways so that it continue up. It's healthy when it does that. However, that's not what we want to see happening here. But you don't always get what you want. So we should probably expect to see more upside out of this, which is not good for our equities. And the chart I like the least out of everything we're going to look at today is this dollar index. Look at that move on Friday. We had been chopping around in here, grinding up a little bit, but nothing too bad. But now we are really starting to move away from, what had been a bit of a resistance and consolidation zone. And that candle on Friday moving away from there and closing just above resistance. Minor resistance, but still just closed above it. We still are in a bit of an area of resistance here. So I'm hopeful that this completely losing momentum, goes sideways, or maybe even rolls over would be even better. That would be a rollover here would be really good for equities, but this is looking pretty strong, unfortunately. All right, let's look at our dollar cost averaging timing tool, and we can see that all systems are go here still. We are getting a little closer to these moving averages that are a bit of a warning sign. The MACD is starting to roll over a little bit, but nothing serious. This can quite easily turn back up again. So nothing to worry about yet. Although, kind of giving us some hints to keep an eye on this and kind of watch out a little bit. So that's on the SPY. The Q is exactly the same thing again, coming down those moving averages, slowing momentum on the MACD, and IWM as well. IWM, please. There we go. We can see, on the MACD we see some slowing momentum, but we still got a ways till those moving averages. So nothing to really be afraid of here. If you are dollar cost averaging, there's nothing here that says you should stop for now. It is still green. All right, let's go look at our global indices. We'll look at the ACWI ETF to start with. This is the all-world index, all stocks and markets throughout the world, and you can see that just like the S&P 500, this is rolled over. Now, unfortunately, on Friday we lost the 50-day moving average that had held for a couple of days. Made that nice hammer on Thursday, and then we got the big gap down. So not thrilled about that, but we should have, if we do continue lower for a couple of days, there should be a lot of support in here. You can see that we've got, a minor horizontal support zone there around 87. You've got the 200-day moving average, the 100-day moving average. You've got that former downtrend line. So lots of places where this could find support. All right, let's look at ACWX, the US. So this is world markets. Less the U.S. And again, big gap down on Friday. Unfortunately, broke through this support line. There is support below, but it's a ways down. But on Friday, we did get this very indecisive looking little doji here. So we could easily see it turn up here and retake that support that was broken. EFA, this is Europe, developed Far East and Australia. Same, looks very similar here. It's lost its 50-day moving average, but we've got some support below. Emerging markets, ex-China, big gap down on Friday, but stopped. The momentum moved down, stopped right at support where it's supposed to. Really want to see this move back up, though, and we're going to need that dollar. So you see the correlation. It's pretty easy to see the correlation here between the dollar index and let's go back to our dollar. You got that big green candle on Friday in the dollar index, and then when you look at your emerging markets, Whoops. There we go. When you look at your emerging markets, the giant gap down there. So you can really see the correlation, or the inverse correlation between the dollar and these global equities. But anyway, good to see it find support at a support zone. Really want that to bounce. FXI, this is China mega caps. Obviously, there's so much geopolitical risk going on here. Also, you know, dollar risk to a degree, and we've got that big gap down like we've seen a lot of so far today. But we are coming right into support from the downtrend line and the 100-day moving average. So again, we really like to see that turn up. Let's move on to our precious metals. And gold continues this decline. Of course, you know, the dollar going up, gold is usually coming down. This doesn't look like its momentum is going to slow anytime soon until we get into this the 1795 to 1800 zone for gold. Should probably provide support, and you can see out of that bear flag there, we've also looked at an area around 1783 where we've also got some important moving averages. So probably expect another day or two of downside here, but should see momentum slow as we come into this zone, where we've also got the 50% retracement of the last rally. The miners, you know, obviously continuing down as well, but a little green shoot with a little bit of a hammer here on Friday, so that's interesting. Are the miners going to be leading gold to the upside? Silver, pretty disastrous here as well. Really nasty day in silver on Friday. Broke through the 200-day moving average, but finding support at this 2085 area. As you can see, is supported a number of times. Well, it's supported back here, and it's been resistance a number of times. So that should support there. If we don't see that turn up from here, then the next stop is, you know, pretty much $20 on the downside. Copper moving down as well. Nasty couple of days in copper. Broke through this level that it was supported quite nicely. 1, 2, 3, 4, 5. You know, 5 touches on that. Broke through that one into this next level here, in around 395. So that's got a support, or we're coming down and testing these moving averages. And DBC, the General Commodities ETF, is at a very, very important support level. You can see, and this support level kind of goes way back to early 2022. So this is supported 1, 2, 3, 4, and now 5 times. So I think that this warrants being changed over to a major support level here. That's got to hold. It's going to get really ugly if this doesn't hold. All right, let's take a look at oil, because oil's getting interesting again. So oil had been pulling back. I mean, we are in a long-term downtrend in oil, but we're also trying to find support here. We're trying to bottom. And you can see that we've turned up. Now, this is only 2 days, but we have turned up before even getting to this level. So this is good to see. We do not want to see. So we're starting to see kind of higher lows, but we still have lower highs. So it's quite indecisive. I want to actually throw another line on here coming off of this one. Do something like that. Because we do have a very nascent, you know, you can't really call this an uptrend yet though, right? We're basically making a triangle here. We're consolidating. And this is all part of a bottoming or basing pattern. So we should expect to see this hold and eventually break out to the upside. That's my expectation. You know, I am long-term bullish on oil and energy in general. And I think we do move higher here. Let's take a look at nat gas. And you can see that natural gas has turned up off of the lows here. Was surprised to see nat gas break out to the downside here out of this space. And maybe I shouldn't have. There is a reason they call nat gas, or the natural gas futures contract. There is a reason they call it the Widowmaker. It's because of things like, well, it's because of declines like this, and then you get a nice beautiful base, and you think it's going to go to the upside, and you get another big whoosh down out of there. But you can see that it's supported at $2. It's moved back up, and it's got back up into the area of this space. So that's interesting and good for if you're still in any energy plays. Definitely good for your energy plays like Birchcliff. All right, let's look at XLE. We've come down to major support here, and it has now, over the last week, supported twice at that level. You've also got the 200-day moving average right there, and now we've got a nice, we've got a nice green shoot here on Friday. It's really got to get up and away from this level, though. Don't want to keep revisiting this level. XOP, the oil exploration and producers, this supported at a level it should have. So this is good to see. Technically well behaved and starting to move back up. Obviously lots of work to do. And we've got Occidental Petroleum. We've got earnings. Was that Monday after the close, or was that Tuesday before the open? But that's coming up very soon, and that's a large component of this ETF. So this is important. If Oxy disappoints, we could see this roll over and lose this support level. OIH, Oil Services. This one is showing a little bit of outperformance here. A nice big green candle right off that 100-day moving average. So yeah, this is I'm getting a little more bullish on energy again. I think we could, and in fact I did on Friday, added to one of my plays. Very small piece, just a really small piece, because I started to see the price action, a change in character in the price action. So I think it's really good chance here that we've got another leg up coming, but maybe not in TAN. TAN looks like it wants to continue to the downside. We may find some support right here. Off of this consolidation. Be nice to see if it did. If it doesn't, we're going to come down and test this gap, and may very well even get into that gap, but that's still a few days away here. The top of the gap should provide support if this level breaks. Okay, let's move on to XLY, or consumer discretionary. Obviously moving down like everything else, but a potential reversal candle. But obviously, Thursday's candle should have been a reversal candle, but we've got another potential reversal candle here near the bottom of this gap, and some support. So I'm not too concerned about more downside in XLY, our consumer discretionary. I think there's enough support here. Even if we pull back a little bit more, we've got enough support here that panic should not set in on that one. XLI Industrials. And of course, we move down here as well. We've got a major support area that it's on right now, and it looks like it wants to bounce there. We've got that green shoot on Friday. XLV. Healthcare, that broke. I didn't notice this on Friday. That broke out the bottom of this channel that had been so well behaved for a couple of months, and now we see a break to the downside out of that. This is quite interesting. So is this going to continue move to the downside or not? And what's really interesting? It's really interesting to see this as broken out of the downside, because in our setups, we've got a couple interesting looking names in the healthcare sector. They're more pharma related, but they are in the healthcare sector. So very curious, this move to the downside. I would not be one bit surprised to see a very strong move on Monday. to the upside, unless the market's falling apart on Monday. But if the market's even somewhat green, I suspect that this could be a fake out, and we could see a strong move to the upside. Just to, because that's kind of what the market does. It likes to hurt people. And it's hurt a bunch of people here because obviously that would have taken out some stops. And, people are going to want to get short, and then a strong reversal here to hurt those shorts, everybody who jumped in there. All right, so let's look at our biotech. And we see that this is continuing to the downside as well. Tried to find a support level here right at the 100-day moving average. That didn't work. Will it find support at the 200-day moving average? We are coming into an area where we should be finding more and more support, right? In fact, look at this. Right off this pivot here is reason for it to support along with the 200-day moving average. I want to get that pivot there because I think that's going to be important. Okay. Reasons to find support. XLRE, and if you've been watching for a while, you've noticed that I've just mixed up the order on these a little bit. We'll try this new order out and go through basically all of the sectors first before we start getting into individual stocks. So this is XLRE, one of our defensive stocks or ETFs, and that has been pulling back as well and coming into a support area. XLP, Consumer Staples, another defensive name, and this has been chopping sideways, continues to chop sideways above support, really kind of building a range here, and there's no reason to believe that this range won't continue to just go sideways. Utilities. Those are grinding down. Kind of got that, really starting to look like that sort of downward channel like we have been seeing in healthcare. Let's just sort of draw that in. Something like that. And you know what? That's fine. We don't need to, I probably sound like a broken record on this, but we do not need to see good strength out of our defensive sectors. Where we want to see good strength is our more aggressive sectors, our technology. That's when we know the market is healthy. Okay, let's take a look at, before we get to technology, we'll look at financials. And you can see that that is being supported by the 50-day moving average. That's good to see. We've got another support line below that. Really like to see our financials, turn up here. And if these can get through this strong, what was strong support, and should now probably be strong resistance, especially because you've got a 21-day moving average and a 10-day moving average right there. It would be really cool if over the next day or two that got up through that and then consolidated up in this zone. That's something I'd like to see. Keep those financials looking healthy. Okay, we're going to move on to XLK, technology. And this is, looking pretty weak and choppy, much like the market, of course. After having, build that nice base up there, when that fell apart, it just got really messy in here. Lots of gaps and stuff. I'm not going to bother to draw them in. I don't want this to happen, but there should be decent support off the 50-day moving average and the 200-day moving average right there. Also, this sort of former trend line. I don't think we're coming down there, though, because I do think that on Monday we have a really good shot at turning up. XLC communications sector, you can see that this is into... broke actually on Friday, broke down below the 200-day moving average, when I'm not at all happy about. That's a little scary. But we're right into this important support zone here and could easily bounce off out of there. And we've also got the 50-day moving average just below here. So it's the sort of thing that, it's a lot of these charts are saying we could maybe have, one more down day. But if we did, a lot of charts get into, a really important support zone where they really should bounce. And our charts have been fairly technically well behaved. Technical analysis been working really well. So there's no reason to believe that it shouldn't continue to work well. and for us to see bounces here. And you'll see more of these areas, as we look at the individual names. First, we should actually, one more sector to go through, and that is the semiconductors. And this is just a little messy, it's pulled back, but it showed some relative strength, I think, over some of the other sectors here. Meta. Okay, as you know, a few weeks ago we pointed out a potential short in Meta. It's worked. It hasn't worked as quickly as I thought it would, and I think there's a really good chance this stops working. So you can see we came down into this 170 area and supported there. Hopefully, if you're in this still, you've pulled some off. You've had a couple of opportunities here to take some off at support areas. Even though this 170 level broke on Friday, look we came down to the 21-day moving average and it found buyers there. So I think that this trade is getting riskier and riskier to hold. Now, that being said, if we have a very weak day in the market tomorrow on Monday, this could easily break through here, and you could see a whoosh all the way down to 155. So, you shouldn't be getting, maybe you don't want to get scared out of the entire position just yet, but I really do think it would have been wise to have been taking a little piece of that off in there. But of course, this is not investment advice. You have to manage your positions yourself. Okay, let's take a look at Apple. Obviously weakness out of Apple here. It broke down through the 200-day moving average, but now it's come down and closed this gap, and it's printed a little tiny hammer in here. So again, reason to believe this turns and goes to the upside. Amazon, this one is relatively weak. You can see that this on Friday broke down through the 50-day moving average. It's already well below its 200-day moving average. It's basically it's below all of the moving averages. And it also broke down through the 618 retracement of that last move up. So that's kind of scary. I mean, this is not healthy. Usually when they come down through the 618, they continue to the downside. So if you're in Amazon, if you're bullish at all in Amazon, you really want to see this turn to the upside, and soon. Netflix. I'm really surprised in this price action in Netflix. I did not think that this support level was going to break. This is a major level, really important level here, and especially considering we've got an uptrend line here. Now this is sort of the newer accelerated uptrend line that just broke. We do not want to see this line below, though. This line right here, we don't want to see that break. Actually, should adjust that. I don't know why that's. There we go. That looks better. Okay. All right. But yeah, like I said, really surprised that that major support level goes way back to that big earnings gap, right? So you can see why that's so important. And with the 50-day moving average there. So I don't know. I don't want to make a call on this one because that level should not have broken. So that really says weakness ahead. However, I think a lot of other stocks, are going to be bouncing, and if they are, then this should bounce as well. All right, Google. Another really weak. I think out of all the FAANGs, this one is probably the weakest. I'm gonna get a fib on this so that we can kind of compare it to Amazon. And oh my, yeah, definite relative weakness here. Look at, I mean, it broke earlier in the week. I guess it was Tuesday actually. Broke through the 618. Now it's broken through the 0.786. Would not at all be surprised to see it come down and test this zone, from 86 to 85. That's just looking horrible on Google. Really surprising, kind of shocking. All right, Microsoft. It is trying to find support at this 250 level where it should find support. We've also got the 50-day moving average just below there, the 100-day below that. So we've got reason to believe that should turn up. Tesla, we normally look at Tesla right now, but Tesla is in one of our new setups. So we'll look at that in a sec. Let's move on to look at some of the names that we've been playing. And this is HIMS. And you can see, look at, we've been looking at a lot of ugly charts, a lot of charts with big moves down. And what does HIMS do? It bounces. Bounced ahead of the market and had a nice green day, up 1.35% on Friday. Did gap down a little bit with everything else, just a tiny bit though. So, this is good. Again, I've been talking about how technically well behaved this is. How you get a breakout, you come back, you test the breakout level, you move higher. You get a gap, you gap and go, right? Keep moving up, get to a level, $10, 10 even, right? Turn down. Then you get back to the top of the gap to the penny, and you turn up from there. Find support. Now a couple of days in there because the market was weak, and then we start moving away. All right, so now we got to look at this $10 level. That's a pivot we want to pay attention to. Does it just go and break through, or is it going to turn back from there, or maybe even go sideways under there? I think that's kind of dependent a little bit on the market. If the market's weak, I could see this going up into here and then moving sideways. If the market's strong, I think it'll just blast right through because we are expecting a lot more upside in this. We're really expecting before there's any serious pullback, I'm expecting to move up into around 1250. So I think there's lots more upside in here. If you start to see a little weakness or pullback from that $10 level and you haven't taken any out of this yet, then maybe that might not be a bad place to take some out. But I still think that you definitely want to hold on to a core position in this because I see no reason to believe that this won't continue to go higher. NVent Electric. This is a play that we were watching. We were talking about how maybe you could play out of there, except that I had wanted to see that. I wanted to see a couple more days in that bull flag, and we're basically getting another bull flag in here. This looks good. Again, if this can pull back a few more days, let the 20-day moving average catch up to this, and then break out of there. That could be a nice little entry in this. So, let's get that. We'll see. It's kind of like, we're kind of putting in some higher lows in here. We're getting really granular on this, though. We probably shouldn't be. But, I think it's worth watching. Again, like I said, I'd like to see this pull back a little more. So there you have that one. Okay, Wynn Resorts. This had this beautiful consolidation, and then it broke out the top side of it, and it put in this nasty reversal on Thursday. And then it came down right to the bottom of that consolidation, and then on Friday it gapped down at the bottom of it, but then it found support right at this gap. So let's actually move into this, or zoom in on this a little more. Probably should actually... You know what? Let's look at this on a 65-minute chart. Okay, that's better. Want to extend this line across. There we go. I'm probably going to have to bring this line down a little farther. So I don't think this play is dead, but it's definitely gotten a little more risky. Just this move here was just so nasty, and if you were playing in here, hopefully you got out of this quickly. If you're a mean reversion trader, and I talked about this in the Discord, and actually you should go into the Discord and check this post out. I talked about how there are really good lessons in here, and how seeing this happen, you should have really flipped to being a mean reversion trader if you had gotten long, closed out that long and gone right to the short side. Because it was pretty obvious that's what was going on. They faked it out up there, and then they just started selling it like crazy and right down to the bottom of the range. And we even went down through, the bottom of the range. But we've bounced really quickly there, like I said, right off, this gap. And, now moving up, we're back in the range again. So worth keeping an eye on because, they may try and break it out the top of the range, and eventually it's going to work. Because this is a strong stock. They're definitely playing games in here. So definitely you want to be careful and probably have some tight stops if you're going to play in that. All right, let's go back to the daily chart and let's move on to our new plays. So the first one I want to start with is Roblox. So I've seen a few. There are a few plays like this. I picked Roblox here. I don't want to highlight a whole bunch of them. But if you look around at the charts, you will see this set up on a lot of charts right now. All right, so let's actually zoom out a little bit. Obviously, so Roblox has been in a big downtrend, and it has been trying to basically bottom now since May of last year. Messy, but getting better looking on the bottoming pattern. Okay, so that's our sort of big picture in this, but we need to zoom in on this because it's the more recent price action that's interesting to us. Now you can see this sort of this downtrend that this has been in for the last year, gapped up through that on earnings. Okay, we had earnings about 10 days ago. Gapped up nicely, put a big gap in there, and it was a bit of a gap and go. So good strength here. But the next day, it just started to roll over, and you can see that shooting star candle, and then we just got a series of big red candles here. Came down, it cut down through these moving averages. The 20-day tried to support for a day, and then it's come down. It's into the 200-day moving average, the 100-day moving average there. So it is also now filled. So basically it came down on Thursday, filled the gap and almost tagged that 100-day moving average, put in a hammer like all the other hammers we saw from Thursday. That kind of failed, but it's put in another hammer today. So I think there is really good potential here for this to move up out of here. I kind of prefer this actually goes sideways a little bit or move up slowly. Put in a bear flag that can fake people out. So a bear flag on this might look something like, something like that, right? Now, that's sort of what I'd like to see it, or even, even better actually would be something like that, where it starts moving up, starts putting in higher lows, but can't get through here just yet until maybe it gets over to this trend line. So that'd be about a week, right? Then if it broke out of there, I think we'd get a really, really good move. I'd be buying that for sure. So that's one way this could set up. Another way that this could set up, maybe that's not what happens. Maybe, and this is this is a way to play this as well, and you can definitely play this. Maybe you just want to buy a breakout of that hammer candle tomorrow. Your initial risk would either be you could take an intraday a stop on this. Maybe stop would be below an intraday low, an opening range low. Maybe the first 5 minutes, 15 minutes, 30 minutes, something like that. Or a stop below the low of Friday's candle. But this is nicely risk defined, and people will play that just because it is nicely risk defined in here and looks like it should bounce off of there. So a couple different ways that this could play out. Definitely worth watching, I think. Next one on the list is Tesla. Now Tesla definitely showing relative strength. The market has been quite weak. We have seen Tesla move up basically 100%, and it has only pulled back about 10%. So good relative strength. more or less going sideways as the market was pulling back, pretty hard, and a lot of its peers in the tech space were pulling back pretty hard. Finding support, just above that 21-day moving average and in an area where it really should find support. I think this is going to turn up. And again, similar to that Roblox play, you could just buy a move above Friday's high, risking the low of Friday, or risking some intraday level. So there doesn't have to be a lot of risk in this for you to get in here. But you also have to expect this is going to move higher, and it's going to get through these resistance areas and continue higher. And I think you kind of have to be a little bullish on the market as well for this. If the weakness in the market continues, we could easily see this roll over and get through these support levels. And if it did get through, if it got through this 100-day moving average in this gap right here, then it would probably move fairly quickly down to 168. But I don't think that's what's going to happen. I think we see some upside in here. Okay, here's one from the Discord. One of our members in the Discord pointed this out. Thank you very much, Jerry. He's been doing some great work over the weekend and beating me to the punch on some of these, which is fine. I really appreciate it. The more members we have, throwing up charts and throwing ideas out there, the better. So this one is WGS GeneDx. It's a healthcare services, weird little company, penny stock. Super risky, right? This is a 50-cent stock. I generally don't play in this space, but I really like this setup. This is a sweet looking setup here. So I probably will play this. You can see what I'm going to do, right? Obviously I'm going to buy the breakout here, but we got to look long term. And there is, this is super risky. So if you're going to play this, play small. There's potential for this stock to actually be delinquent on the NASDAQ. They've got to get the price up above, I believe it's $1 and soon, or they, could face delisting. Now, obviously, they're going to want to do that. They did an offering recently. Most likely thing that's going to happen here is this thing is probably going to do a reverse split. They'll probably do a 10-to-1 or something like that, get it up to $5. So that's probably coming soon. So if you get into this play and that happens, don't let it freak you out. But you can see nasty downtrend, but trying to put in a bottoming pattern here. And, it made this nice move up and had a pretty decent pullback out of that move. And now we're really, consolidating and putting in a series of higher lows in here. And a nice flat top on that. So, this thing's a no-brainer. You buy the breakout out of here and you find yourself a spot, probably intraday, probably an opening range low or something like that to put your stop in. I would not want to, have a stop all the way down here at 37 cents or something like that, which is where you'd normally have a stop on a swing trade that you intend to be in for a long time. I wouldn't want to give this thing that much room. If this is going to go, it's going to go fast, and there isn't going to be any pullback. You kind of don't have to worry about getting stopped out if you have a tight stop in this. So yeah, that one's really interesting. Another one from the Discord is CPRT, and you can see this looks kind of similar. However, the bottoming pattern in this one is much, much more mature. The chart in this looks a lot better. You can see that we're in a very long-term uptrend. This has been going up since an all-time low in 1996. Okay, so we've got a solid company here. I'm surprised I'd never heard of them before, but I wish when I was involved in the market back in 1996, I had just bought this and never looked at it again. Anyway, you can see now that over the last couple of years, we have basically been going sideways, been building a big wide base. That base narrowed a little bit in here, okay? And now we've broken out of that and we're consolidating again. So this is all very, very healthy price action in this one. I should have drawn that base into. You can see how this, how big this base was that it is just broken out of, right? All right, so let's zoom in a little more on this. So we come up, we had a kind of a run up. It had a nice little consolidation here. Jerry, how come you didn't tell us about it right there? Nice break out of that and going sideways again. Putting some higher lows with that flat top. And you know what to do. You're going to buy the breakout up here. So if we can go up, move up to here, go sideways for a couple more days, I think that'd be even better. And that would give us, a better way to manage our risk in this. Because right now the risk is a little wide. Stop would be down around 68 from a breakout level just over 70. I'd like to tighten up that risk management a little bit on that one. Again, I like it though. I really like this. And if we can get any help from the market at all, this really goes. All right, next one. I was a little on the fence about bringing you yet another Canadian energy company. But what the heck, I really like this company. I've been doing a little bit of research into it and what they do. And they've been buying up distressed oil wells. Companies that are going broke, or the bank has repossessed the wells, and they can buy these wells for pennies on the dollar. So that's what they're doing. So yeah, if you look at their fundamentals, you get the financials in this. It looks like they're spending a lot of money, but they're spending money buying assets and buying distressed assets, which is great. And you can see. Let's actually get some context on this. Going way back, they had come down with the price of oil. Had come down, in the between 2015 and 2020. Obviously, COVID hit them really hard, along with the price of oil there. But since October of 2020, they kind of been on the way up. They had a really nice leg up there, and for the last year have been in this consolidation, this nice triangular consolidation pattern, and it's really tightened right up in here, as you can see. And we've had, over the last couple of weeks, a couple attempts to break out to the upside here out of this little base. Let me draw that in. There we go. Something like that. And another one just on Friday, and coming right up to this downtrend line. You can see we've got some moving averages overhead. So there is potential danger here that a breakout is going to fail. So that's why I think really tight risk management on it. But I think this thing could take a move, and I also think longer term. Look into the story on this. This could be a long-term hold for you, especially if you think long-term that the price of oil and gas are going to, move back up. So this could be a good play for that, and this could be a very good place to get in for a longer-term play. Oh, and by the way, this is Joy on the Toronto Stock Exchange. There is over-the-counter as well that does have decent volume. And the ticker on that is JRNGF. So that's for our American friends if you want to play this. And you can see the chart looks very similar. There is, you do have a little bit of currency fluctuation in this one, but not too much to worry about. So this is a way for you to play this if you want to play it in US dollars. All right, that is all our setups. We have a nice little list of setups. There's some good-looking setups in there. I think you kind of have to agree. And a nice variety of setups as well. So let's take a look and see what we've got coming up. So next on Wednesday, Wednesday, the 1st, we have a ticker talk, as we always do on Wednesdays. So our members get to come and bring some tickers that they're looking at. We do a deep dive analysis on the charts of those, and that's always fun. So if you want to join us for that, take a look in the description below. You will see a link to come join the Discord. We'd love to see you there. And I think that's about it. Thanks for coming out, everybody. Hit that like button, share, and subscribe, and enjoy the rest of your weekend. Thanks so much.